Hello, investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you how I made $2,000 using one simple option strategy. Even better than that, I'm going to show you how you too can use this option strategy in order to get the same or even better results. Now, if you're new to options trading or you're trying to make an extra amount of income in order to supplement your regular 9 to 5, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you one simple option strategy that allowed me to make $2,000 in a short space of time. We're going to do this video in three different segments. I'm going to start off by showing you the proof so you know this can be done. Next, I'm going to show you some basic due diligence that you need to perform before entering this option strategy. And lastly, I'm going to give you a step-by-step walkthrough of this option strategy and show you what strike price I will pick up if I were to do it right now, today, as of making this video. Now, you guys know how we do it. Let's go ahead and get down and dirty with options. For today's video, we're going to be using none other than ARM Holdings PLC, and that stock ticker is going to be ARM. Okay, so here I am on arm holdings, and this is one of my long calls, or what's known as a leaps option. Now, I'm going to go down, I'm going to show you the evidence of one of this option. Now, as you can see here, I'm up $1,460 or around a 72% return. Now, for those of you that are very new to options, or for those of you established people, this is a LEAPS option. It does show the expiration date of January 16, 2026, but don't worry about that. This option has been rolled over several times. If most of the language I'm going to be using in this video, you do not recognize it, then that's fine. This is going to be the perfect opportunity for you to go ahead and join the channel in order for you to learn this and many other income generation option strategies. Now that we have this out of the way, let's go ahead. I'm going to show you some basic due diligence that can be done if you want to implement this strategy. So for that, we're going to go back to the ARM sticker and we're going to go into the Robinhood advanced feature right here. What that's going to do is that's going to open up a chart for us. Now we're going to go ahead and we're going to go to the 1 year mark. Now, just two things I always require from my subscribers and my viewers. The first thing is always to do your own due diligence before investing. The next thing is always make sure you have some kind of exit strategy before entering any options trade. So this right here I'm going to show you right now is some basic due diligence that anyone could do, even if you're new to options trading. So what you do, you're going to go out to the 1 year mark. What we're trying to decipher what the 200-day price is. The 200-day is going to be representative of this blue line right here. And that shows it's been trading around, it should be trading around $135, $137 based on the 200-day moving average. And to the right, you can see it here, MA 200 or 200-day moving average. Now, currently, the share price is at 123. Now, the 200-day moving average tells us the stock should be trading around 135, 137. However, currently, the stock is trading below that. So right there, that tells me there's some kind of opportunity right there. Now, before we continue, every good trader, every good investor always knows one confirmation is not enough. We need to always get secondary confirmation. Now, for the secondary confirmation, what we can use is what's known as the RSI or the Relative Strength Index. If you guys want a detailed video about the RSI, then just go ahead and search the channel. I made a detailed video so you can understand this right here. Now, the Relative Strength Index is what's known as a momentum indicator. So it tells us the movement of the stock. Now, an RSI, where ARM is trading right now, is around 50. So that tells you the stock is smack down. It's not in overbought territory, neither is it in oversold territory. So it's perfect right now. So now that we have our secondary confirmation, which is a 50 RSI, and the current share price trading below the 200-day moving average, now we're going to jump in and we're going to decide what strategy we want to do with this option in order for it to get those kind of results. Now for that, we're going to go ahead, we're going to go back to ARM, and then we're going to open up ARM's option chain. And to get that, you go down to the bottom here that says Trade ARM Options. Now, this here is known as the option chain. this entirety of information down here. For those of you that are new to options, or you may be new to the channel, this down here, the option chain, gives you enough information in order for you to make a very informed decision about what contracts you want to enter. Now, to implement this option strategy, we're simply going to go to buy, we're going to go to call, and we're going to choose a far out expiration date. Now, there's two strategies that can be used with this. You could either do what's known as a long call, or you could do what's known as a leaps option. A leaps option is another long call, but a long call is not a leaps option. So just for the purposes of this video, we're going to go to March 20th, 2026, which gives us 320 days to expiration. Let's go ahead. We're going to select that. Now, in order for you to get very favorable results like how I did, it's very, very important that you go ahead and choose a strike price below the current share price. Now, the current share price, like I mentioned earlier, is 123.31. So what I would do right now, if I'm picking up this long call right now, if you're an ultra conservative investor, I would go ahead and choose the 110 strike price. Now with the 110 strike price, that's gonna cost me $35.10. This is a buying option strategy. Now, if you're more risk adverse, then I would go ahead and I would choose the $120 strike price. And for that, you're going to pay about $500 less. For that one, you're going to pay $30.30, which works out to be $3,030. As you well know, each option contract is multiplied by 100 shares. So either of the two is good. Now we're going to go ahead and open up the secondary option chain just so I can give you some additional information. And to get that done, you simply click into the price and that's going to open it up. What I want to bring to your attention is the implied volatility. The implied volatility for ARM is perfect for trading options. Now, the reason why I say it's perfect is because it's trading that nice implied volatility sweet spot. And that sweet spot is going to be between 50% and 100% implied volatility. That is the sweet spot you want to look for when you're selling options. That means the stock that you're currently trading is not too risky with huge fluctuations up or down. Now, let's go ahead and check out the implied volatility or the IV for the $110 strike price. Remember, you can go ahead and use both the 110 strike price or the 120 strike price. Now, IV here is a little higher, but it's still between the ranges of 50% and 100%. So both of these going to work out perfectly fine. We're going to go ahead and we're going to go with the 110 because we're very ultra conservative investors on this channel. And that's going to cost me 35.10. Now, as I told you before, this is known as a long call. Now, this is a quite simple option strategy. This is the equivalent of a buy and hold for stocks. This is the buy and hold for options trading. So you simply go, you buy a long call, and you have to do nothing else but leave it in your portfolio. That's it. It's quite simple. Once you leave it in the portfolio, the market will do what it does. Now, overall, the market always goes up. There may be some pullbacks, there may be some crashes, but overall, the market is going to continue to go up. The whole point of doing a long call is that you're giving yourself enough time for the market to do whatever it's going to do in the short term, and that's going to be enough time for you to passage through all the volatility that the market has to offer. So in order for you to go ahead and get about a $2,000 return, then you want to consider the option strategy of a long call. Now, these results, although I show it to you, they are not guaranteed. I'm now going to go ahead and show you two stocks I have in my portfolio that's going to give me that total of $2,000. So I did show you the result of a ARMS Leaps call option. Now I'm going to show you the two others. Okay, so here I am on a second Leaps option in my portfolio, which is going to be none other than Robinhood, ticker HOOD. And let's go ahead and see the returns that I've been getting. So currently, I'm up $238 or 19% representation. Stay to the end of the video. I'm going to show you guys how I do intend to manage these Leaps option. So my 1460 plus my 238, and then now I'm going to go ahead and show you the third one that's in my portfolio. I do have about 5 to 7 leaves in my portfolio. I'm currently just showing you 3 and how they're doing right now. Okay, so here we are on the third leaps option in my portfolio, and that's representative of Trade Desk, ticker TTD. Let's go ahead and let's show you the returns on this. Okay, currently TTD is up around 37%, which is going to be equal to $265. So now we have 265 plus 240 plus 1,460. So that should add up to about $2,000. Now that $2,000 came about in about a month or so. So the name of this game is gonna be patience. Now, so while you guys have these leaps option in your portfolio, there are other additional option strategies that can be done that's gonna allow you to make consistent income while waiting for the share price to appreciate in value. If you guys want to learn those other income generator option strategies, then go ahead and check out the link in the description below. I'm also going to leave the link in the first comment. If you're interested in any one-on-one coaching, then go ahead and click that link. Now, for those of you that made it to the end, I'm going to give you guys a bonus right before I tell you guys how I'm managing these options trade. Okay, so here's a bonus sleeps option that I do have in my portfolio, and that's going to be Super Microcomputers or ticker SMCI. Now, let me go ahead and show you the returns on this. So currently I'm only up less than a percent, which represents the $3. So the reason I wanted to give you guys this as a bonus is to show you if you guys were to go ahead and check out the chart for SMCI, this stock just released earnings and this stock had a huge drawback. Now, although the stock had a huge drawback, as you can see, the results are still positive. So I just wanted to bring that to your attention. Now, how am I going to manage these leaps option? Well, it's simple. These leaps option all have about 7 months to expiration. I'm gonna leave it alone for now. Like I said, the name of the game is patience. Although I'm up that amount, I'm not gonna close them off quite yet. Once they get to 3 months to expiration, then and only then will I make a decision of what my next move is gonna be. Now, my next move could be several options. You do not have to close it off, you could roll it off. There's several things that can be done. So there you have it. In order for you to achieve a goal of like around $2,000 in your portfolio, it is very advisable that you consider the long call or the leaps option strategy. That option strategy is a buy and hold option strategy, which is going to allow you to maximize your gains. Now, thank you guys for watching. Go ahead, like the video, subscribe to the channel, but most importantly, if there's anyone out there struggling to grow a small accounts portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that regular 9 to 5. Now, until the next video, keep pushing your investments.